By now you should know how to create buy and sell lines on your chart from the earlier videos. Here I've placed a buy line on close, a BLC, on the Euro US dollar 1 hour chart, and I'm looking to trade the breakout uptrend. We've sorted out our break-even point and where our stop loss should be already, and this was covered in the last video. Now we need to think about getting out of the trade once we're in it. You can let TradingSticks place the exit lines on the chart automatically, or you can draw them on yourself. I like to set and forget with a bit of drag and drop, each trader to their own. Let's look at how to set these up within TradingSticks itself. Firstly, do we want to use a trailing exit strategy at all? The answer here is yes, we do, so we'd say true. The second question, do we want to use an exit on touch or an exit on close if the price action closes below the line in our buy trade? Or both? Well, in this example we're going to use both. Then we look at what distances do we want these lines from our price action. Well, what we're saying here is that on the exit strategy on close, if the price closes 40 pips or more below this line, then we want to close out of our buy trade. Or exit on touch to close the trade. Now the next question, which I always leave as true, is do we want our stop loss and exit strategy lines automatically to be added by TradingSticks when the trade opens and is triggered? I always think that's a good idea, saves you having to worry about running a trade without a stop loss. The next question is, do we want TradingSticks to automatically add the exit on touch, exit on close, or both when we add our stop loss line? Well, because I want to run both on touch and on close at the same time, I'm going to add them automatically. So when the trade opens, 3 lines will be placed on the chart. That will be the stop loss line, the exit on close, and the exit on touch. Now the next question is, do we want the exit lines to move immediately or only when we lock in a profit, for example at the break-even point? So if, for instance, you're the sort of trader that likes the exit strategy to move and follow the price action, so even though the price action itself may not be in profit, the actual risk becomes less because the lines move with the trade, then you would check this as false. However, if you want all the lines to sit back and do nothing until the trade moves into profit and you lock some of that profit in, and at that point you want the exit lines to start trailing, this is when you set the option to true, and that's what we've set here. And finally, although it's mentioned in previous videos, here we set where our stop loss and exit lines are to start. So if in the previous example we had set this to false, then because the on touch line is the same as the stop loss line, both of those lines would be together, and the trailing exit on close would be 20 pips closer to the action. The point on this here, which we will see as the trade unfolds, is that although the exit strategy on close will trail 40 pips behind the price action, it cannot move closer to the price action than the close of the previous bar, because if it did, it would automatically close itself out. So there are occasions when the on touch, even though it is further away, or should be further away from the price action than the on close, the on touch may overtake. We possibly will see an example of this in our example trade that we're going to do now. Now TradingSticks is set up and our buy line close is ready to trigger our buy stop order. When the trade is triggered, we will see TradingSticks place the stop loss line and the buy exit on touch plus buy exit on close below lines ready to move when the trade reaches the break-even line. Let's watch the trade unfold. Here we go. So you can now see the trade is now opened. Down here we have our buy stop loss line Couched underneath these lines, which you cannot see, is the exit strategy lines, and we are looking up here to hit our buy target line 1, and also we have our break-even line. Almost there. As soon as we hit it, watch all the lines start to move. There we go. Right. That's where our stop loss was. Our stop loss has moved up to here to lock in our 10 pips profit. Our first trade has closed out, 29 pips in profit, and we've got 39 pips locked in. That's the 29 plus the 10 locked in here. Here is our buy exit on close, and here is our buy exit on touch. You can see that this is now sneaking. Both lines are dynamically sneaking up. Remember, at any time we can actually take one of these lines and drag it up. We can take our other line and drag that up as well. Okay, I'm watching this now in super speed. Watch for the lines down here. Do this line to move this over. It's trying to close below that line. We can move that over to here and angulate our exit on touch. Taking out any minute on this line. There we go. Down it came. So that was quite a good trade. We could run, just a recap here, our exit line, we could have run it up at any angle. We could have had it carrying on running horizontal, or we could have put a 60 degree, a 45 degree. This particular trend could not sustain itself at that angle, and it would have to come back again, which is why I angulated the line to lock in some of the profits if it went into a reversal, which it did. If we look at the actual trade information up here, the first trade locked out 29 pips. That was at our break-even point, so we locked in the full, well, hopefully we wanted 30 pips, but we got 29 because of slippage. The second trade closed out at 93 pips, so we made 121 pips between the two trades there. Thank you for watching this video. Look out for other videos in this series. We recommend One Cancels the Other OCO Strategies as the next video in this series to watch.